Good morning, distinguished participants. I'm Okechukwu Aja, welcoming you to South Saharan Social Development Organization's webinar on understanding the new tax law in Nigeria. Our emphasis today will be on the implications, compliance, and practical guidance for citizens and organizations. Once again, thank you for joining us. Your presence shows commitment to compliance, accountability, and responsible citizenship. Today, we'll be simplifying key provisions of the new tax law. We'll be looking at the compliance expectations and provide actionable guidance for CSOs, small and medium enterprises, as well as individuals. Tax compliance is not just legal, it is central to transparency, efficiency, and national development.
Our topic today is on understanding the Nigerian tax law. What us as individuals, business owners, CSOs, and NGOs, what we need to understand on the new Nigerian tax law.
Now it's my pleasure to introduce our speaker, an expert and in the person of Udoamaka Okoye. She is a chartered accountant with over 15 years of experience in the non-profit finance, tax compliance, internal controls, and donor-funded project management. As finance and admin manager at SSDO, she oversees financial reporting and regulatory compliance. Has successfully defended tax audits with zero penalties and strengthened internal control systems across projects. She is an associate chartered accountant, an associate member of the Chartered Institute of Taxation of Nigeria, and is known for translating complex financial and tax issues into clear, practical guidelines. To briefly outline today's structure, we'll begin with the main presentation. This will be followed by an interactive question and answer session. We'll then conclude with the key reflections and closing remarks. Without further ado, I invite Udoamaka to take us through today's discussion. Thank you.
Hi, everyone. Good morning, and welcome once again to this webinar. It's my pleasure to be here. Let me share my screen. Please kindly type on the comment section once you're able to see my screen, that you can see it so that we can proceed. Please, can you confirm you can see my screen so that we can proceed?
Yes, we can see your screen.
Okay. All right. Thank you very much. Okay. Okay. So thank you once again for joining this conversation. This conversation is very important because Nigerian tax regulatory environment is evolving, and a lot has been going on. There are a lot of news flying up and down. That was why SSDO deemed it necessary to put this webinar together, so that it's important that people have access to the right information. Right. So today we'll be niching into the new tax laws, how it affects individual business owners and non-governmental organizations. So in our main focus today is to understand the key changes that happened in the new tax law, how it affects you as a business owner, and we will identify the risk, compliance risks as it applies to individual and business owners and NGOs as applicable, and the practical steps that you need to take in order to navigate these compliance issues. We all remember in June 2025, our President Bola Ahmed Tinubu, signed into law the new tax laws. That was how the media carried it at the time. And in those tax laws, we have 4 of them, but the main focus has been on a particular one, right? But today we're going to look at all the laws that were signed, all the acts that were signed into law that period, and how it affects our businesses and individuals as far as we live and operate in Nigeria. So the first one was the Nigerian Tax Act 2025. this law gives us an idea on what is going to be taxed and what is not going to be taxed. It's all about, it gives us a holistic view of the income that is taxable and the ones that are not taxable. That's the main focus that the media focused on. A lot of news has gone on onto this particular line. Then the next one is the Nigerian Tax Administration Act. This one controls the tax on how it's going to be enforced, assessed, and the penalties that applies to it. Because once you don't apply to the laid down rules as it has to do with taxation, there are penalties that applies to it. So this is the document that shows us what applies, what is to be enforced, and how assessment is to be done as far as business and individuals are concerned. Then the next one is the Nigerian Revenue Service Establishment Act. This is the act that now empowers the NRS, the former Federal Inland Revenue Service, to Nigerian Revenue Service, and this empowers them to enforce and investigate and collect taxes. Before now, it's not clear which body is responsible for this, but the new tax law has made this to have a clearer view on who is responsible in collecting taxes. So, as of January 2026, the Nigerian Revenue Service is the body that is responsible. So if other body comes to you and tells you they want to do an assessment, they want to do this, investigate your books, they don't have that right. It's only the NRS or the State Internal Revenue Service. Then the next one is the Joint Revenue Board of Nigeria Establishment Act. This is the act that establishes and creates the Tax Appeal Tribunal. Is a platform. This is a body that oversees any displeasure that you may have based on the investigation that was carried out from the NRS and the tax liability that is given to you. If you feel that this liability is not what it's supposed to be, right? You have the right to appeal through the Joint Revenue Board of Nigeria. That is it. These people can now look at your case in line with the law and see what is applicable and what is not. The key word there is the law, because everything that has to be done, every case, every tribunal case that has to be tried has to be in line with the law. What did the law say? Because that is what taxation is. Then moving forward, let's narrow it now to the individual. So based on what these new laws are, based on these new laws now, who are those that these laws affect? Someone reached out to me the other time and said, I'm in Nigeria, no, but I don't think this new tax law applies to me. I said, no, as long as you earn income in Nigeria, that is what the law says. If you are in Nigeria, you operate, you are a business or an individual, you live and operate in Nigeria, you are obligated to these laws. That is what the law says. So it's not about age now, or I'm not up to 18, or this or that. Once you earn income in Nigeria, you are obligated to comply. Please, can somebody confirm that they can see my screen as it's scrolling? I want to be sure that you are moving with me with the slide. Can I get a thumbs up on the comment section, please? If you are seeing me as it's scrolling, or just a confirmation. Okay. Okay, thank you. Okay, so before we move forward to what the individual must know, because we are narrowing down to what the individual must know, I want, we can be typing on the comment section, what means have you had on social media? What is that thing that you have had on social media that has scared you about the new tax law? What is the, when you hear about the new tax law, what is that thing that's when you hear it and you are so much afraid? Oh, these people have come to kill me and all. You can be telling us in the comment section as we are moving ahead. So narrowing down to the new tax law, how it affects individual and what individual must know. So as an individual that resides in Nigeria and earn income, if you earn income, you have a tax obligation. This is not now a matter of you are an employee of it's only employees that pay tax, right? Because that has been the norm before January 2026. It's no longer only employees. Even if you have a business, as a business owner, as a freelancer, right? As a crypto trader, anything that you do that earn you income, you are obligated to pay tax as an individual. That is what the law says. So it's not just the employees of organizations, that the people that are employed that receive salary that are obligated to pay tax, right? So everybody now is obligated to pay their taxes. Then also, annual tax filing is also compulsory for every individual. Before now, once you're an employee of an organization, you assume that your employer had already filed for you with the Inland Revenue Service, but that is no longer the case. It's now mandatory, it's now compulsory as an individual to do your own tax filing with the State Internal Revenue Service where you reside. Yeah, your employer may do for you, right, based on the salaries they pay for you, but you as an individual, you have to do your annual tax filing. And what is annual tax filing? You are coming to the State Internal Revenue Service, telling them, these are my income for the year, January to December. And these are the expenses. Based on the Tax Administration Act, these incomes will be assessed based on what the law says, and a tax liability will be given to you. That is an obligation you have as a citizen of Nigeria. So, and it's not something that we need to run away from, because that's the essence of this webinar we are having, because it's always easier to be compliant, right? Than to pay penalties that applies to compliance. So it's also cheaper for you when you do things when you are supposed to do them. Because in line with this law too, there are penalties if you don't do things when you are supposed to do them. So as an individual, if you have not done your filing, for example, from January to December 2025, please, you need to go and meet your State Internal Revenue Service and declare your global income. You can be in Nigeria and be receiving income from outside Nigeria. You are meant to declare those income, right? That is what the law said. So on your global income, you declare your global income. That is what you do under the tax filing, and it's compulsory. And when you do this, that is when you know that you're a compliant citizen. Then on rental income, some people are also employees. They're also doing their other businesses, but they have houses, right? Another side hustle. They have houses that they rent out to individuals, which they receive rental income on. It is also your obligation to declare these incomes that come from rents to the government. Yeah, it's your obligation to do that. And any other tax that is your side hustle is no longer, because everything now, you know, the one thing that is very certain is that the new tax law is now infused into technology. It's no longer what you now tell government that you earn. Now they have the right to use technology to actually assess what you have declared, whether they are true or not. So that is why you need to do them with your mind and come with a bare hand to the law and declare what you are supposed to do. So on the rental income, you're supposed to declare it, and it's also very important that we keep proper records. Very, very important, because it's from the record that is what the assessment will be based, right? Because you cannot come and a money that you do not describe, the tax authority describe what it is for. The tax authority can assume it to be anything. That is when it gets into your bank account and asking for further details on your filing, because they have the right to request for further details, not just what you say that you earn. They can tell you, can we get the source of where these things are coming from? Can we get your statement? They have the right to request for those. And when they do, right, the descriptions that are in your statement of account will help a whole lot in the assessment and in determining your tax liability. So I know so many people that don't actually give narration to the transactions that they do from their bank accounts. Is important that you do this thing, because you never can tell when assessment will get to that level, right? That a statement will be requested from you. So it's something that you need to be proactive about, because when it's time for tax audit, you cannot do things in retrospect, because you can't go and be changing the details in your bank account. It's something you have in mind before you transact, before you do things. You know that you need to get document A, B, C ready in case of the future. That is what is called self-awareness. So as an individual, you need to know these things so that it's easier for you when the tax authority comes. In any case, it will be easier for you to defend whatever it is that you have declared or presented to them, right? Then it's also important that you have your tax identification number. Before now, it's not a thing that a thing is important. Now it's very, very important as an individual, because the law says if anybody does anything with you, any legal business with you, without you having your team, that organization is liable to a fine, right? So you see why it's important that you have this, because so that you don't know when opportunity will miss you. Your tax ID is very important, because that is what identifies you as a taxpayer, as a citizen of Nigeria. So these are the things that an individual needs to be aware of. As far as the new tax law is concerned, you're obligated to pay your tax, you're obligated to file, and also declare your global income. It's not now a one-sided something you need to do. Then moving ahead, I am focusing down on PAYE, because I have gotten a lot of questions on this. Some people don't understand how this new tax law, the PAYE, as it applies to them, some employees of organizations, right? So I said, let me put up this sheet so that I will also explain to any other person that is not very clear as to how PAYE is being computed. So what is PAYE? PAYE is a form of personal income tax. It's pay as you earn tax, which you are supposed to pay as an individual, right? So how this is arrived at is your gross salary minus your allowable deductions. That will give you your taxable income. So there is something that is called allowable deduction, things that is allowed for you to deduct before you charge tax rates on. That is called allowable deductions. And what are these deductions? We have pension, we have National Housing Fund, we have National Health Insurance Scheme, we have the rent relief, right? The pension, of course, is the part of the employee that is allowable here. Because in line with the law, the employee is supposed to contribute, the employer is supposed to contribute. Employee 10%, minimum of 10%, employer minimum of 8% for employee, employer minimum of 10%. So the employee part is an allowable deduction before you charge your tax. Then the National Housing Fund is 2.5% of your basic salary, right? You can deduct a maximum of 2.5% of your basic. Then for National Housing Insurance Scheme, 5% of your basic. The rent relief, 20% of your annual rent. So in this new tax law, this is the key change that happened here. Before, it used to be a consolidated relief allowance, but now this relief allowance has been replaced with a rent relief, which is now 20% of your annual rent, or 500,000, whichever is lower. That is what you are going, that is allowable for you to deduct. Then you have your life insurance premium. If your organization is doing a life insurance premium, this is an allowable deduction. You have your interest on mortgage repayment, right? If you borrowed money to build house, the interest that this mortgage yields as you are repaying them, those interests is actually a deductible allowance before you charge your taxable income. So when you get all this, when you deduct all this allowable deduction, you minus it from your gross salary. What you now have as a balance is your taxable income. And on that taxable income, this is the progressive rate that will now apply, right? The progressive rate that will apply. We have the first 800,000, which is zero rated. So if after you have deducted all these allowable deductions and your taxable income is in the threshold of 800,000 and below, you are not going to pay any personal income tax, any pay as you earn tax as it relates to you. Then the 15% is charged from any amount above 800,000 to 2.2 million. You charge 15%. Any amount above 2.2 million to 9 million, 18%. Like that, the progressive rate from any amount above 9 million to 13 million, 21%. From 13 million above to 25 million, you have 23%. From 25 million to 50 million, you have 25%. So you can see the new tax law actually focuses on, their focus is on targeting the rich. They want to be sure that the rich pay more tax, while the low-income earners pay little, a minimum tax. That is the aim of the new tax law. So with this now, I believe some people are a bit clearer on this. So moving ahead to the next slide, as it relates to small and medium scale businesses, right? How does the new tax law affect you if you're a business owner? The first one is that registration is no longer optional. If you're a business owner, I wonder how you are doing your business without registration. You don't, you have a business and you are still allowing people to pay into your personal account while it's a business money. So these are the complications that you are causing for yourself, because you are not now separating the income that comes from your business from your own personal money when it's now time for you to do your annual filing. You see how complicated it can be? You can now even pay more tax because from the beginning, you were not proactive in keeping your records properly. So the first thing as a business owner is to get your business registered. It does not cost much to register a business. You can register it as an enterprise or as a limited liability company, depending on the nature of the business that you do. But it's no longer business as usual. It's no longer optional. It's compulsory, because it's when you register this business that you can have benefits that the new tax law has for business owners, for companies, right? So as a business owner too, you are meant to pay company income tax. That is if you pass a certain threshold, because the new tax law is very, very graceful. They are trying to encourage the small and medium scale businesses so that they will benefit, to encourage them to grow, right? So the new tax law actually gave the provision that if your annual income is no more than 100 million and your assets is no more than 250 million, you are exempted from paying company income tax. So income tax is actually a tax that you pay on your profits as a company after you have removed the expenses you use in running the organization and everything, the operational expenses. The balance, the tax that you charge on profits, which is now pegged at 30%, is what this new tax law exempted businesses, companies that are registered, that has less than 100 million in their annual revenue and 250 million less in their assets. So you can see what this can benefit for you. As a business owner, you are obligated to deduct VAT, right? In as much as this is an obligation, there are also some items that are zero rated and they're exempted from VAT. These are the things you need to be conversant with as a business owner so that you know when you are transacting on these items, you don't need to charge VAT on them. Something like agricultural products, educational materials, and the likes, right? So as a business owner, as a company, you are meant to deduct VAT and be compliant with it as well. You are also required to pay PAYE for the staff that work for you and other staff-related compliances like pension, like health insurance, life insurance, and all those. You are meant to comply. That is what the law says. So if you have a business and the people that are working for you, you don't deduct their PAYE and remit to the government, you are wrong. You're not doing the right thing. If you're deducting pension and you're not remitting, you are not doing the right thing. One day the law will catch up with you. That's the truth. You know, you may be doing this because there's one thing with tax, like with non-compliance. You may be doing it, and you may think that you are going for free and nobody's seeing you. It just takes one day for everything to be brought to light, you know, and you have to pay all the penalties as identified. So being compliant is something that you need to be intentional about, right? And proper records keeping are also compulsory. It cannot be overemphasized. As a business owner, I have mentioned about mixing up your personal money with your business money. These things are, you know, that's the list. That is a lot that I see when you move around, when you deal with any small business owner, any business transaction, they will tell you, pay it to my personal account. It's no longer business as usual because now that money now can be seen as the money that you earned as an individual, and you'll be taxed based on the personal income tax, right? When tax assessment is being carried out on you as a taxpayer, as an individual. So you need to actually separate this money so that you can separate also the filing and everything that has to do with it. Then withholding taxes, you're also meant to withhold taxes as a company from vendors that you work with. You withhold taxes. We have varying rates from 0 to 10% based on the nature of the transaction, right? You're meant to understand these things as person that runs business so that you know the one that you don't need to charge withholding tax, the one you need to charge 2%, 5%, 10%, as the case may be, right? And as you are deducting, you are remitting, because it's one thing to deduct. When you deduct and you don't remit, you are not being fully compliant. It's even more offense for you to deduct and not remit. So when you deduct, it's important that you remit whatever you have deducted to the relevant tax authority. Filing deadlines, of course, there are filing deadlines, right? All the taxes that you deduct, there is a deadline to it, VAT, withholding taxes. If you don't pay as you are supposed to, as and when due, there are penalties for late compliance. And for filing, for companies, every company is meant to file their annual returns on or before 31st January of every year. You file for, like the one for 2025, for example, the deadline had already passed. For some states, I think they gave a 2 weeks extension. For some, that deadline of 31st is what it is. So from January to December, all the pays that you did for your staff and all the withholding taxes you deducted as an organization, you are supposed to put them together with all your support documents and file with your state internal revenue service, right? And if you don't file before 31st, there's a penalty. Then as an individual also, if you don't also file as an individual, there is a penalty. I think for individual, the deadline is 31st March, right? So if you're an individual, you have not done your filing, there is still a little time for you to do that, to comply with the law. Yeah. So record keeping is also very important. I have talked about that. You don't just pay money when you don't have evidence of what you are paying for, right? As a business owner, at least the simple thing you can do is to have record on how your expenses are being approved, the support documents, your invoice and receipt. What are you paying for exactly? Or are you the type of business owner that use your mouth to tell your staff what to pay and what not to pay? It doesn't cost much to document these things. A good Excel and a good Google Sheet can help you put your things together that you can easily refer to them in the future. So if you're that kind of VD that use WhatsApp messages to communicate to your staff, to make payments and all, is not going to be favorable for you in 2026. That is why we're here to remind you of that. Then penalties are not easier, are easier to enforce, yeah. For tax authority, of course, they smile at penalties a lot because it gives them a lot of money. But it's your responsibility to do the things you are supposed to do on time so that they will not see any penalties to take from you. Because when you are compliant, nobody will come and tell you to do any penalty, right? Penalties come when you don't do what is in line with the law. So moving forward, these are the things that can attract tax audits. I remember there was a time we witnessed one as an organization here in South Saharan. It was not an easy thing at all to go through a tax audit. That is, it was after that experience I said, no, I need to, it's something we need to talk about more as an organization so that people will be aware, because so many people are not aware of what goes on during tax audit, right? And it is a period when your records will speak for you. Because for a tax assessment man, anything that is not documented, you can't use your mouth to say, this was how we did this thing, and that was why we did this thing this way. They would never accept it. That is it. So you need to pay attention to the way you keep your record as an organization. Have a system in this place, have a system, have a structure, right? That before any payment is made, there should be, this thing should be recorded. You make somebody to be responsible for it. I know most times we can talk about the money part is because of the finances. That is why we are still running it this way. But the penalties we will pay because of not doing these things right, you can actually use it to do the right thing so that you don't pay those penalties. If you look at it that way, right? So, and it's no longer a period where you do cash heavy transactions. Make sure that most of all your payments, me, I will advocate for all, not most. All your payments, make sure that everything is done through a bank transfer. That is where you can have a trail, right? You can easily identify what the money is for and all. It will help you a lot. Yeah, and for a tax authority, when you declare your annual income, you are telling them that you are earning 80,000 in a month. Meanwhile, you are using iPhone 14 Pro. To a tax authority, of course they will look at you and know that there is more to what you are not saying, right? That these are the things that can call up for tax audit. They may now ask for, can we have your bank accounts and all that? Because they are looking at what you said you earned and what you are wearing, for example, right? There is a mismatch to it. So why we are saying what we are saying is something that you need to be intentional about and be honest about it. Now, as it relates to an NGO, yeah, one of the means I have also heard is that there was this NGO that I was talking, they always say, NGOs, every time they will tell you, NGOs don't pay tax. NGOs don't pay tax. Yeah, it's true. NGOs are exempted from company income tax. That is it. That is the tax you are exempted from as a non-governmental organization that is operating in Nigeria. Because we're a non-profit organization, so the tax that we pay on profit, we are exempted from it because there's no profit to pay tax from. But outside that, every other tax, your payee, the people that work for you, you are supposed to deduct payees and remit on their behalf. It is your obligation to do that as a non-governmental organization. Your withholding tax, the vendors you work with, you're obligated to deduct withholding tax. VAT as applicable based on the nature of the transaction still applies to you as a non-governmental organization. right? Also, the annual returns that we talked about, all these things apply to you. As a non-governmental organization, you are meant to file with your state internal revenue service. It's mandatory. If you don't do it, there's a penalty for you. There is a penalty for you. So we are re-emphasizing on these things so that it's clear to us. Then donor compliance is not the same as statutory compliance. Yeah. A donor may come now and tell you, this is what we want you to be doing. This is how we want you to retire our money. Make sure that this is like this and that is like that. And you do it. Yeah, that is called donor compliance. You are just complying to the requirements of that particular donor. But then there is also statutory requirements and compliance, which is what you are supposed to comply with as to the country that you are resident in, right? And these are the things that we talked about. So you don't assume because you're compliant to a donor that you are not now compliant to the statutory compliance you are supposed to comply with. So it's important you infuse these things together so that you don't use one as an excuse for the other, right? Find a way to marry them together, because these are where some of the challenges come from the non-profit. You said this donor will not allow us to, for example, a donor may not want to charge them VAT, for example, right? That they cannot pay VAT, right? A donor may not want you to put VAT in your budget so that they will bear that cost. So, but you need to find a way around these things because you still need to comply with the relevant tax authority, because they won't hear the donor did not allow me to do that. Yeah, moving ahead now. What are the things that you need to take away from this, right? What are the things you should do now? The most important is that you need to know your tax category. Where do you belong? As an individual, are you doing what you're supposed to do? As a business owner, are you doing what you are supposed to do? Have you filed your returns correctly and on time? Are you keeping proper records? Right? And in any way that you see some of these things that you need help in them, you can get a professional to support you early, because timing is very important in this thing. Timing is very important. You get a professional to support you on time. A professional can guide you on how you need to do something. You don't get professional when it is now late. The tax auditors are around now. You're now calling a professional to come and formulate something to, It's always good to involve the professionals on time so that they will tell you how to form your processes and systems so that it will not be, there won't be any penalties to them. I think that will be all. And thank you very much. And it's time for listening, and it's time for questions now. Okay, over to you. Thank you.
All right, Kosi, yours continue moderating this aspect.
Okay, thank you very much for that engaging session. I personally learned a lot, and I'm very sure our participants did too. I know before now, most of us didn't understand what the Nigerian tax law was about. And when people don't understand something as serious as tax, misconception and fear fills the gap. But I'm very sure now that this session has helped us to understand the new Nigerian tax law better. So we will move over to the question and answer session right now, and we'll be taking a few questions from the chat box. So Rejoice, we have here a question from Rejoice Madi. I heard that any money that enters your account will be taxed by the government. Is that true?
Okay, am I to respond to them one after the other, or are there a number? I should respond to this one?
Yes, please.
Okay, so it's not only, this is something that I think it went viral on social media. So many people were talking about the government taking money from your bank account. Of course, it's not entirely false, but the point now is how and when would this happen? right? The tax authority cannot just come and go to your bank account and take money. There are processes to these things. It's true that there is a section in the tax law that actually have that clause, right? But that is the last resort when every other option had been exhausted. For example, if during the tax assessment, a tax is assessed, your filing is assessed, for example, and your tax liability is given to you. And a communication also supposed to be made to you in terms with that tax liability. And if you have issue with it, there must have been a series of back and forth information, and you are not agreeing to paying the tax based on the evidence that the tax authority has on ground. That's the thing. That is when they can go to that extreme to go to your bank account to take your tax liability, right? There must have been evidence, and there must have been some communications to you, series of communication. But then again, there is a tax tribunal where you can go to sort out any discrepancy or any issue that you may have. I hope that this answers the question.
Thank you very much. Rejoice, I hope you're cleared on that answer. So we're taking another question from Josephine Ogazi. For the tax brackets of 25% and 23%, from 23% to 25%, is it more than the old law?
Yes, thank you very much, Kosi, for that. Yes, of course. Like I said, the aim of the new tax law is to tax the rich more. The aim is to get more money from the rich brackets, right? So, of course, yes, it's higher. It's higher. I think before now, the highest tax rate is 21%, but now it's got up to 25%. Yeah. So before now, the highest tax rate that will be charged to you as highest income earner or a high income earner is 21%. But now it has increased to 25%. So if you fall within this bracket, I think that's the category the new tax law is targeting on. I hope that answers your question. Thank you.
All right. Thank you so much, Udoamaka, for this. And this webinar has generated a lot of interest and so many questions popping up. Dr. Tahiru is asking to know what about retired staff, what pensioners or an on contract. Is the deduction of withholding tax enough on the subject matter, or how can they pay their tax? We just wanted to know how it affects them.
Okay, if I heard you correctly, because that is not very clear, you are asking about the pensioners, right?
Yes.
Okay, yes, they falls into the category because if a pensioner is the government that is now, if you're a pensioner under government, right? Depending on the pension you are referring, if it's the government pension or the contributory pension scheme that the private sectors do, those are the different, because if it's the contribution pension scheme, it's already something that is exempted. So there will be no tax on it, right? It's something that pension, like I mentioned, is part of allowable deduction for a personal income earner, right? Before you now charge your tax rate. So it's not something, it's not tax chargeable. The highest you can take from there is withholding tax based on if the money is invested and the return on the investment. You are now taking a withholding tax on the return on the invested money. That is where the taxation will now come in. I hope that answers that question.
Yes, you did.
Okay, so we'll be going over a few other questions. We have a question here from Tessie Oche. She asked, apart from the payee that organization file, does individuals need to go and file their personal tax income individually from the ones that their employees have filed? Thank you.
Thank you, Kosi. Of course, I mentioned, yes, you are obligated to do that outside the one your employer filed on your behalf as an employee. You as an individual, because we don't know you as an individual, whether you earn other income outside your salary. So that is what the new tax law is also targeting. They want to make sure that all the incomes are declared to the government, right? So as an individual, yes, you're supposed to take yourself to the State Internal Revenue Service where you reside and declare your global income outside your salary. Maybe you are doing 9 to 5, and you are also a freelancer, for example. You are doing crypto, for example. You know, those side hustles, you are supposed to tell the tax authority, these are other things that I do outside this. Yes, you are supposed to do your annual filing with the State Internal Revenue Service where you reside outside your employer. I hope that answers the question. Thank you.
Okay, thank you very much. Tessie Oche, I hope you're cleared on your question. So we have another question. She seems to be a student. She asked, Madu Precious, she asked, do the government also tax students?
Okay, thank you for that information. Of course, the government, like I said, is looking at earned income, emphasis on earned, right? If you earn income, it's the earned income that the government is targeting on. If you're a student and you earn income, some students do businesses. Yes, you're supposed to declare that income from that business that you do, right? So that is what the law says. It's not, yeah, you may be a student. There are big established people that are also students that are doing other things too, but that's in school. So it depends on what you do. Some students don't do anything, it's fine. You don't earn any income. You are not part of the people we are talking about. But if you earn income in Nigeria, this law applies to you. I hope that clarifies.
Okay, we still have some interesting questions here. Obianuju Ezike is asking, how does the law affect small businesses differently from large ones? Hannah is also asking, what are the immediate compliance steps for people with small businesses? And Mr. Udoamaka wants to know the difference between the old and new law as it relates to NGOs and donor-funded projects.
Okay. The first question, the one that asks the difference as it applies to big businesses and small business owners.
And larger ones. Yeah.
Okay. Small businesses and larger ones. Okay. So for the new tax law is the threshold that I described. That is the benchmark we're using to know which one is a small business, because a big business that doesn't even have office may be doing sales in billions, but they have only one office, right? You don't use physical structure really to know which one is big business. So the new tax law had made it that if your annual revenue is less than 100 million and your total assets as an organization, as a company, is less than 250 million, you are categorized as a small business owner, right? You're a small company if you are fall within this threshold. But the question now is where some people will tell you they earn even more than the 100 million, but they are still declaring themselves as small business owners. So most people will go as far as requesting for your audited statement to know your annual revenue, to be sure that it applies to you. You understand? So as a business owner that has a small company, this is how you will know. So anything above this is described as a large company. As a large company, you are now required to pay income tax at the rate of 30% on your profit, right? Compliance and everything becomes a thing. Yeah. So even as a small business owner, even though you are now exempted from paying tax, you are also required to do other filings, the VAT, and other things that has to do with it. I hope that answers that question.
Yes, it did.
Yeah.
And
Then
our
on the
time is a bit past spent, so we'll just take one final question. Maybe Amaka, you conclude the question you're answering, then we'll take one final question.
okay.
So
I am not sure I responded to all the questions, but yeah, I think time is not on our side. I wanted to
I
talk
was
about the
saying you
NGO.
conclude with the question
Okay.
you're answering, then we'll take one more question.
Okay. Okay. I don't think I responded to the difference on the NGO thing. I don't think the law really affected the non-governmental organization, right? There is no major distinction as it relates to the non-profits. Is still the same compliance of before. It's just that it affects the vendors that we deal with. On our own part as an NGO, we are, for example, meant to pay careful attention to the vendors we deal with, because if you deal with a vendor that is not compliant, that doesn't have a team, you as an organization, as an NGO that dealt with that vendor, you are liable to a 5 million naira fine, right? So, but that is not in the law before. So these are the things we need to pay attention to. You don't just deal with any vendor that you see. You need to make sure that every vendor that you deal with, that you have a contract with, business with, that they are compliant. I hope that answers that question. Don't know if I'm missing any other one.
No, you answered the question. Thank you very much. So in a minute, I have two questions. If you could please answer them. Tessie asked, how do you treat payments to a contract staff who serves as a consultant to your organization? Do you take withholding tax or PAYE? Then Victor asked, let's say my employment is on contract basis and I'm being charged withholding tax on my monthly payment. Am I supposed to still file annual return?
Okay, thank you, Kosi, for that question. So there has been this debate on contract staff and how to deal with them. But when it comes to these kinds of things, what we relate to it is with what did the law say, right? So the first question is, this staff that you are dealing with, is it a one-off contract? Because you can engage a consultant now that will do work for you a month, 2 months. That is his contract. That person is a consultant. But you cannot engage a consultant for 2 years. You say that the person is, as far as is a payment that has to do, you do on a monthly basis. This is supposed to be a staff to your organization. Supposed to be a staff to your organization. So once, so it depends on the nature now of that transaction. If is a one-off thing, something that happened 1 month, 2 months, for you to go do this thing, fine. But if it's something that you have a long period, your name has to be in the payroll of that organization. That is how the law described it, right? Consultants are people that you engage to sort out something for you for a period. So if the person is staying for a long period, you put them under PAYE and deduct their remittances. And if you're a consultant that's engaged in this, of course you are supposed, because you earned an income from the organization that is paying you as consultant, you're supposed to declare, because they said they deducted withholding tax on your behalf. Yeah, so request for the evidence of the withholding taxes deducted, for example, and you still need to go and remit. I mean, and file your annual returns, declare yourself. But remember, it's important to pay attention to the states that you reside now, because some people move around. You may be in this state this year, next year, you are now in another state, right? So if you want to file, you need to come back to the state you resided for the period those payments were made, because it's to the State Internal Revenue Service that you did those, that those payments were made, not in the new state that you are residing in. I hope this qualifies.
Yes, thank you so much, Udoamaka. We have a question from Titi Adebile, and we almost omitted this, and she was saying, my question have not been answered. That's how important it is to her. She's saying, mine is a new startup charitable foundation. What do I need to know? I've been trying to keep records of requests for funding by target beneficiaries. All monies are transferred from the designated foundation account to beneficiaries. What else do I need to know, please? Really wants to know.
Okay, thank you. I'm okay for the question. Like I mentioned, as a non-governmental organization, your compliance is focused on the vendors you deal with, right? The vendors, emphasis on vendors, the staff that you work with. You're supposed to deduct withholding, PAYE from your staff and remit. If you do a program and you have a vendor that supplied you food, for example, you are meant to take withholding tax from the vendor and remit it. It's important. When you deduct, you need to remit, right? Yeah. So of course you're exempted from the company income tax, like I mentioned. So what you need to do is pay attention to the vendors that you select that work with you as a non-governmental organization. You need to pay attention to be sure that those vendors are compliant. Because like I said, if you deal with non-compliant vendors, you are liable to penalties, right? And yeah, that is practically that. Once you pay attention to these things, then you do your filing. At the end of the year, right, you go to the State Internal Revenue Service and do your filing of the staff that worked with you that you deducted their pay. Filing is not just an accumulated information of the payee taxes that you have deducted from your employees and you remitted with their receipts, right? You are telling the government, these are the people that are working with me, and this is what I am paying them, and these are the taxes that I deducted, and these are the receipts of the remittance. You are giving it to the government. And you are also declaring your withholding taxes that you deducted from your vendors. Yeah, once you do this as an NGO, these are the basic, the critical parts of compliance as a non-governmental organization. And it's also important that you keep records, because this is also where most upcoming NGOs are not getting it right. They don't have that system yet where records are being kept. Everything that is being paid for is documented. So it's an area you need to pay attention to as well. I hope that answers your question. Thank you.
Thank you very much. Titi, I hope you're cleared on your question. So we'll be taking one final question from Izuchukwu Basis. Please, could you clarify the modalities of tax payments for organizations and individuals who have been declared bankrupt?
Okay. Thank you very much, Izuchukwu. For organization, did this organization an individual that is be declared bankrupt? Kosi, is that the question?
Yes, he said, could you clarify the modalities of tax payments for individuals and organizations who have been declared bankrupt?
Okay, of course, there is a law when it comes to bankruptcy. There is a law that applies to that, because you need to we need to itemize all your assets, right? Yeah, because bankruptcy is now a different case. When an individual or an organization is bankrupt, we are looking at the assets you have as an individual and also as an organization. If you are liable to other individuals and other organizations too, right? Yeah, the attentions are being paid to these people in their order before we now come to tax. There is also your tax liability is still there, but the issue of bankruptcy is a separate case here, which you involve some experts to itemize, list all your assets, the people you are owing, right, in their order. Because in line with the law, there are categories on how these people will be settled. The people that will come first, you need to first settle first before the other. So talking about tax, yes, you still have a tax liability, but that may not be the priority at the time, because for somebody that made a loss, for example, you don't pay tax because you don't have any profits that you need to pay tax on, for example. So if you are bankrupt, the key this thing is not the tax now. It's about the people the debt you are in. The investors that invested money in you and in your business, those are the key people that will be considered first before the other part. I hope that clarifies.
Yes, it does. Izuchukwu, I hope you're cleared on your question. I mean, we're behind schedule, but we could take 1 minute to answer just a few more questions. 2 more, actually. We have a question from Favor Carlo. She's asking the deadline for filing. And we have one more question from Tosin. He or she asked, please, my question is on project staff, non-permanent. Do we have to pay PAYE or continue to pay withholding tax? The tax law mentioned something around paying PAYE if they are working directly with the organization and not outsourced. Thank you.
Okay. Starting with Favor's question. Thank you, Kosi. Favor, the deadline for filing for individual is 31st March. Deadline for organization, 31st January. I think that of the organization had already passed, right? So if you're an individual, you have not filed, you still have like more than a month to do that to avoid penalties. The penalties are not small thing. I think it's 100,000 the first month, then 50,000 the months following if you don't do your filing on time, right? Then coming to the project staff, the tax authority, they work with the information you give them, right? With the evidence also, backed up with evidence. So we as an NGO, the staff that work with us, yeah, some staff are project-based, but they are still part of our payroll. We deduct PAYE and remit on their behalf. And when the project ends, we still tell the tax authority, this project has ended, like these people are no longer with us, right? It will be part of the documentation is there. And as a result, our staff now reduced by this number. These are the people we now have. Because you cannot say you are charging withholding tax on somebody because the person is not, if it's a one year project, yeah, the person is, as far as the person receives monthly payment, is a payee the kind of personal tax that the person is supposed to withhold. Remember, withholding tax is a tax that you withhold on behalf of another person, right? Somebody that you engage to do one or two things for you, not something that is consistent on a monthly, you pay the person. So I would advise that for the period of that project, once it's up to a year, 6 months, 8 months, the person can be on your payroll for that period, and you deduct the payee and remit. Once the project ends, you tell the tax authority that these people are, because you cannot remit tax when the project staff are not there. I hope that clarifies.
Okay, thank you so much. I was seeing 2 hands raised. The first was Titi Adebile, but I believe your questions has been answered because I'm not seeing your hands raised again. But we still have Justin Seneke. His hands is raised, but I'm looking at the question you just asked, and I believe that is why you were raising your hands. So I'm going to just drop it, although we are behind schedule. He says, thank you so much. What about pension? Do you have to pay pension on the non-permanent staff as well? Thank you.
Non-permanent staff, the thing is, it depends on, as an employer, right? The first question is, how long do you want to engage this person? Because I know some people that have worked in organization for up to 5 years, they're still calling them contract staff. They are not entitled to things, as employers are also trying to look at how it will be better and cheaper for them, because they know if this person is a staff, you're obligated to do pension, health insurance, and deduct PAYE and remit. So most people run away from that. That is why it's looking like we are going through the withholding tax thing. So through the person has come and do this thing and go. But when it's looked at in line with the law, it's not something that is very welcomed, right? So the first question is, what period is this person going to work with you? If the person has stayed with you for a period, what's the contract, right? You do the needful. You deduct, you do pension on behalf of that person, because the pension, remember, on the private sector, is the employee will contribute, the employer will contribute. It's not just solely on the employer. So it's something that I will advise, right? If the person has been confirmed as a staff, because that's the thing. If the person is confirmed, the person can go ahead and benefit from all these things that every other person is benefiting from. I hope that question is answered.
Yes, I believe it does. And thank you so much, Amaka. From the feedback we've gotten today, it's clear that this webinar on Nigeria's new tax law has generated a lot of interest.
Thank you so much, Amaka. Today's session has been very educative, and I'm very sure our participants learned a thing or two. Today has been truly about replacing fear with clarity. We've learned that the new Nigerian tax law it's not built on social media posts or rumors. It's built on structure, compliance, and most importantly, it's built on accurate information. We've learned to be informed, and we will make better decisions. I sincerely want to appreciate the speaker for breaking this topic in a way that is practical and clear and very relevant for us individuals to understand. Thank you so much. I'll leave over to my co-moderator to close for the day.
So I encourage every one of you to follow our organization via our social media platform. Our name is South Saharan. And once you type South Saharan from the Facebook and Twitter, Instagram, LinkedIn, even TikTok, everywhere we are just South Saharan, and you can use it to follow us up. We have very interesting programs, upcoming webinars, cutting across various domains that will interest your organization, your businesses. We will be even having programs and webinars that's even centered more on the tax, finance, grants, and organizational management and all. So thank you again on behalf of SSDO. Thank you for joining. We look forward to continued collaboration, and we thank our resource person and our finance expert who took time to answer a lot of questions. I know you still have questions. You can still reach us on our social media platforms and ask your questions. Have a maximally productive day ahead. Thank you.